So, okay, guys. Well, thanks for joining us today. So, I think there's a few topics that I've put down to discuss. But if you want to add any topics, or got something that you really want to talk about today, then let's do it. I mean, I sort of scrambled these topics together. To be fair, just trying to be on point at the moment. Obviously, I wanted to bring Adam into the group as well and talk a little bit about apprenticeships as well. I also wanted to talk a bit about COVID and how we're coping with that kind of stuff, and also maybe to touch on a little thing like is it a good time to buy a business? So maybe that's where Byron can come in and Phil can come in as well. So I'm trying to bring everyone in one way or another. So just add your views, and don't worry about effing and blinding or anything like that. We can always edit them out if needs be, or we can keep them in for a bit of fun. Doesn't matter, does it? So just so you know as well. So what we're going to try and do is get most of the video down on YouTube. And then just whittle it down into smaller chunks, basically, because on LinkedIn you can do a maximum of 10 minutes, but really no one's going to sit there and watch 10 minutes worth of a video. I mean, you'd be lucky to get them to watch 2 minutes. So if you could try and keep your responses, short and swift, that would be helpful. But we know these are difficult topics, so sometimes you need to be talking for a while. So, and we can always break them up. We can always just actually have a video on, one person's response. So, we can do lots with this. So let's just give it a crack and crack on. So I was really going to start with the first topic. I know it's what everyone's been talking about it for months and months now, but COVID-19. I think what's interesting about it is that it's here to stay in my mind. Yes, there might be a cure in a couple of months, but this is here to stay. And we're going to have to cope with it for months and years, and maybe beyond that, because I think it's going to be around and always affect us. So how do you think that's going to affect businesses, and what should we be doing to cope with it, rather than locking us down every flipping time? Should we just be really sort of anal about making our workplaces really COVID-19 protected? Can I open that up to the group?
Yeah, I think obviously from a legal point of view, from a strict legal point of view, there's obviously instantly rules and regulations you need to follow in terms of what you should do now to create a COVID secure workplace and meet the lockdown rules. I encouraging all your staff to work from home. But yeah, I think in practice, it's really important just to be adaptable and be able to streamline your work practices and be able to work remotely. I think the businesses that are going to survive are those that can move to remote working and flexible working, and have shown that already, I think. And in terms of management relationship with their employees, I from talking to my clients and with James Legal itself, is really important. Client communication with staff is fundamental right now in terms of everyone knowing what's going on, what's going to happen, the impact of it all, especially when everyone's working from home and that direct communication is limited. It's really important to make sure that, because it's very worrying for staff and very worrying for employees, so it's really important to keep those communication going. And yeah, you need to be up to scratch with video conferencing, communicating with staff on WhatsApp, things like that. So it's sort of forced businesses to modernise. But if you can modernise and adapt, I think you're ready for this sort of situation to happen all the time.
I think that's pretty fair, but I think we have to learn to live with it. I think actually shutting offices and sort of these lockdowns, whilst I appreciate 100% while they're doing the lockdown, I think shutting offices, sending people to work from home and not actually preparing for it is not really the way to go. I think, certainly from Inksmoor's point of view, the way that we've had to adapt our sales, we had salespeople out on the road, including myself, and we would, a lot of networking events, a lot of socialising, and that keeps the business rolling in. So you find yourself, working on a deal and then finding new deals at events or coffee meetings, etc., etc. I think the hardest part has been, and I know that the finance industry, which will include sort of Rob's business as well, the biggest problem that we've had as an industry is actually there's none of those events, and you're not networking, and you're not having coffee meetings, and you're not creating business. So what is the new norm? How do you create that? And I think a lot of people are having to find a new sales strategy, which is which is not just the protecting each other and protecting your employees from COVID, because I'm not a scientist and I certainly don't have the answers to that, but I think that the knock-on effect is that it is here to probably stay, and that how do businesses extend their sales strategy when, you've got a sales guy sat behind his desk, maybe in his kitchen. How is he creating business? Because it's not the normal way, and I think that's the biggest thing that we have to learn to adapt to.
Yeah, which is, completely agree with that. It's funny because right at the beginning of this process, everyone goes for a coffee, don't they? Like, that's your initial point contact. Let's get together, let's have a coffee. And I was saying a lot of the time, once this is all over, we'll catch up. So I was sort of pushing it back for business development.
Yes.
So, we'll get together, we'll get a coffee when all this blows over. And it just obviously it's not doing. So now I'm saying, we'll have to get together online and have an online coffee, and it's becoming, I think it's forcing yourself to become comfortable with that sort of way of dealing, which is not ideal because face to face is always best. But I think this sort of communication online is better than being on the phone. So.
Absolutely. Yeah. And if you're anything like me as well, and I guess we all do, is if you do a deal with an introducer or to meet somebody, you go out and have a lunch or a couple of drinks or whatever it might be. And I think that what that does is it kills a relationship. It doesn't allow a relationship to grow, because, you don't learn anything about each other. You don't spend any time. You don't get to know what I'm good at. You don't get to know what you're good at and what you specialise in, because we've never spent any time together. And these Zooms are fantastic. They really are. But I think that sometimes it's very hard work because you're not in front of each other. And if you've never met somebody before, it can be a bit awkward. And then the fact that you can see his dirty washing in his living room and everything else, sometimes it becomes a little bit too personal. And I think, that meeting in a third place, which is neutral, is sometimes really, really. If I meet somebody for the first time, I like to meet them off their site and off my site, because it creates a environment when I think that's what we're missing.
Yeah, I think just picking up on that as well, that it's fact what we're talking about here, it's quite hard to generate new sales at the moment because we can't build that relationship.
Yeah.
So it's very important to look at the clients you've got. What can you do to keep them happy and to keep them, and can you sell more to your current client base? And then the bigger picture is like we're all sort of saying here and agreeing that it is going to be the new normal. We're not going to sort of come back in the new year and it's all back to, we're waiting for a coffee, the networking is all started up again. So businesses need to now start really looking at the business plan again, again, short term, but especially over the next 6 months. Again, accepting that things aren't going to go back to the old normal. So what is their future going to look like? So what have they got to do around their sales process, around the current clients they've got? What about the people? Suppliers, everything. Again, they need to re-look at the business plan and what that means over the next 6 months.
I totally agree with that, Phil.
Yeah.
Sorry, and I was going to say, I totally agree with that, Phil, because from our point of view as well, and what Gareth touched on earlier, is that we're all about face-to-face and meeting people. And I'm sort of from an old school background in the sense that we learned to pick up the phone and do cold calls and get in front of people and then go and meet them face-to-face, that kind of stuff. That's all changing now. I think we're being forced down the social selling route, basically, where we're going to have to embrace LinkedIn, videos that we're doing now, and various other ways of trying to, get some contacts and build rapport. But I must admit, I'm struggling to build some rapport on video. It really is difficult.
Yeah, it's not the same, is it?
It is tough, and I think the longer the week goes on, the more that you do, you can see your energy levels and your performance on them dropping.
Yeah,
because they're a lot more tiring than driving an hour to have a meeting with somebody face to face. But I think just to echo on what everyone said, we was before this a very face to face business. So we, from business development, sales to actually operational delivery, all of our courses are delivered face to face. So I think what we've done and what we're having a lot of conversations about is the agility, it's the importance of digital. So I think it's been spoken about for many years, and this has just fast tracked it. And it's really looking at the positive ways of using what we're doing currently. So, for example, you've got so many people who put the barriers up, and Byron mentioned, we'll meet up face to face when this is over. But your business, you can't wait for it to be over because we don't know when it will. So we're talking about utilising the positives from it. And an example is a national client would normally wait until they have enough people in a geography area to start a cohort. They've now got the whole country to get a cohort quicker, to get the learning development started. So we're trying to spin it, and I think a lot more businesses, they can put that negativity aside. We've been through it. Yeah, we know it's bad, but let's look at what are the positive, what are the opportunities, and focus on them. Then that would potentially help form that business plan that Phil mentioned for the short term and the next 6 to 12 months, and put them in a better position to utilise the strengths in the business now, because it will come back. And what we're using, it'll be blended. So I think you'll blend your week a lot more from face to face to digital. I know that with training, we will be definitely doing a lot more online digital learning, but we'll blend it with that face-to-face, so we know the importance, we don't want to lose it, but we also see the efficiency on the online stuff now. So it's, for us, it's agility and focus on the positive elements instead of the negatives, which we're hearing day in, day out anyway.
Yeah, definitely. And pivoting basically and changing your direction, your business plan, which Phil is an advocate of, absolutely. Are you all working from home now, Adam?
Yeah, we all worked from home in the first lockdown, so we felt it was right to replicate that for this lockdown. The only element, because we, under the Section 7 for education, we fall under that as an independent training provider. So we can still carry on, but we're continuing virtually for all delivery. The only thing that will be done in our offices or in centres will be exams, because that assessment needs to be invigilated. It can't be done remotely, so that element is the only thing that will be carrying on in a face-to-face or in a venue, because ultimately, if we can't assess them, then we shouldn't be really doing the teaching during the lockdown.
Sure. And I know, Byron, you're working from home. Phil, sorry, go on, Byron.
We are working from home, but the office is still operating to admin staff there, or it's a very, very limited number of staff, people who can't actually do the role at home. So it's important, obviously, when you're looking at this, is if you are going to have some staff at work, to make it COVID secure and make sure you're meeting those. So we've essentially set up an entire COVID secure office now with and what a lot of people are doing with hand sanitizing stations and masks on entry. And at the minute during lockdown, we're not allowing anybody in at all in terms of clients. But there is still some posts coming in and some admin work that needs doing. So we have got an office, but in terms of the fee earning staff, they're all based at home and working remotely. And to a certain extent, I think that's how that we have like a hub office that hasn't got an office space for everyone, and you might all meet up once a week or every other week, and it's operating as a hub base, and then everyone's working remotely and out in the field. So I think it was coming this, but it's been a catalyst for it, hasn't it?
I think just to share something that we implemented when we returned, I believe in July, until we closed again on yesterday, was we had people that obviously are office-based employees, but we split them into two groups. So we had two groups that worked alternate Monday, Wednesday, Friday, Tuesday, Thursday, week on. So if there was a case, it would only be one bubble that was isolated, and we still had, and we tried to split, so we had skill sets in each group that could kind of take over if required. And I thought that was quite a good plan that we put in place, as well as obviously making the office COVID friendly and deep cleans on a regular basis. So if that could be an option for anybody, I'm more than happy to share it.
Yeah, what do you think about productivity, about people working from home? Do you think the productivity is the same, or do you think it dipped a bit?
I think it depends on the person, Rob. I think we've we've actually had 5 of our staff asked to work from home permanently, which we have actually agreed to because their productivity went up. I think there's other staff that where, I would like them in the office to keep an eye on them. And I think there's some staff that need to be in the office anyway. The interesting thing that we found about it, which was quite phenomenal really, was our stationery spend. Because our stationery spend, I would say, is relatively high. And we spent next to nothing in lockdown, to the point where some of the staff didn't even claim ink cartridges back or even ask me, whether I haven't got a printer. I guess they didn't print. And I think that was quite interesting for us in the fact that we, maybe people are just printing for the sake of it. Maybe now they're at home and they see it as their own, or they don't want to, or whatever it is. We have got some working from home. We've let in this lockdown, we've decided people can make their own decisions. We're very lucky, in fact, in our main office, there's a desk between everybody, so there's plenty of space. And we've let them make their own decisions, and there's only one, to my knowledge at the minute, that has taken us up on that. Everybody else is coming in, and I think that it starts to, I think we have to be sensible and not mix, but I think it starts to have a mental and physical effect on people. And actually, a lot of people, sitting at home when maybe the whole family's at home, starting to get to them a little bit. And I think if we're sensible, like Byron was saying, deep cleans and sanitising, etc. I think, to be honest with you, I think it's down to the individual. If you're a 60-year-old person who's in a high risk category, or a young person in a high risk category, then stay at home and your employer should support you. But if you're relatively fit and healthy, I think you can make your own decisions.
Yeah, we've done it exactly the same with our staff there. We've sat them down and say, look, anybody who doesn't feel comfortable coming in the office, work from home. When they were working from home during the previous lockdown, we probably saw a little bit of a dip in productivity, but that's mainly because we've got a mix in sort of young accountants, mid-range, and FD type at the top. So the younger ones rely on their peers to help them during the day, and obviously that support wasn't there. So we did have a mixed bag in the first lockdown. This time we've all, apart from one person who was in the office all week this week.
I think that's really interesting, Phil, and this is maybe slightly off topic, but something that you've just said there, it'd be interesting to see. I know a lot of people are being made redundant. I think I was looking at the figures the other night, and it was another 2 million more. But what worries me is how many people. So if you're a younger person and you're ambitious and you've got on a scale, whether that's in a top 10 business or FTSE 100 or even in smaller businesses like ours, and you want to go and reach the stars and get promoted, COVID will have affected that hugely, because you won't be around your peers, you won't be picking up, you don't even know you're picking up, that's going in. And I've learned a lot of things by not knowing I've learned them, by just sitting next to people who are sat chatting to people all the time. And I think that's going to stunt, and it sort of pulls in Adam's side as well, is that it's going to stunt a lot of young people on their career ladders, because they're not going to be in that office environment. I mean, I can't think of anything worse than a big firm where, like Byron said, having a hub office and everything else. I can't think of anything worse, because I think we're slowly slipping down as a nation into this. Well, I'll just text him. I won't ring him. I'll just text him. I get clients texting me information, and it's not acceptable in sort of my world. I want somebody to talk to me. I want to see the whites of the eyes. I want to know if I'm lending them a few quid, I'm going to get it back. And I think that this, if we're not careful, we're going to become a society where socialising is going to be massively effective. And I think Byron's right in what he said. COVID has brought this further forward. I think you'll have a lot of the London firms. A pal of mine owns an insolvency practice in London, and he's just shut his office. Nobody's been in since February. He doesn't even expect to go back in it. That's on the top of Oxford Street. The rent's immense. And I think that a lot of people would just go and they'll get 4 desks. I don't think it might be great for business. It might be great for cost savings. I don't think it's great for socialising. I don't think it's good for people's well-being. And I think that's what could be massively affected.
Yeah, totally agree with that. And in fact, we've employed an apprentice this week, started on Monday, and as soon as this happened, I thought, oh my God, what we're going to do? Is he going to be working from home? How am I going to look after an apprentice that is going to be effectively sat in his bedroom on his PC trying to learn about this industry? It's almost impossible. So we decided to bring him in, and to be fair, we can social distance in it. It's not too bad. So, but I do worry because, and bringing yourself in, Adam, because obviously you deal with a lot of apprentices. How has that been affected? I mean, because at the minute the government incentive is to employ apprentices, isn't there? So
yeah,
is it fighting each other?
No, definitely. We've had a few organisations that were planning on bringing on new recruits, utilising the new incentives, but they've delayed it because, one, they would prefer to meet face-to-face in an interview environment, but two, they didn't want to, like you mentioned, have an apprentice left on their own, because part of the apprenticeship is work-based, and they're learning on the job. They're learning from the peers, the line manager, as well as the external coach mentor from the apprenticeship provider. So I think it will definitely make an impact on that side. For us, predominantly, a very large percentage is upskilling existing members of staff. So we won't be as impacted as some that focus mainly on new recruits. And with that side, it will just depend on the industry. You've got some organisations that we're working with that have probably grown through the pandemic, so they're recruiting, they're seeing people take on additional roles, so they're wanting to provide them with the skills and the tools through training development. So we've seen an increase on that side, but then a decrease on the companies that are potentially looking at every penny. They're making redundancies, they're fighting for their lives. The last thing they're thinking about is training development of people. I do think that it will be key when things settle and business owners start looking at the future plans, that whether they've grown or reduced in size, there's going to be skill shortages, whether that's people taking on additional responsibilities because of downsizing, or new people coming in or progressing into roles on growing companies. I think the apprenticeship scheme will support that very well. And obviously looking at bringing in new people, the incentives of 16 to 25, you're looking at £3,000 that they can gain, which is a nice amount of money, which shouldn't be thought about to cover the wages. It's more about that support of that individual from internal staff. It's any costs associated that it can cover, and hopefully it will boost that market, because when you look at employment, it's always that age range that seems to get the biggest hammer.
Yeah, I think we took advantage of that, obviously. Of course, I think it wasn't quite 3,000 for, I think it was maybe 2,000, but that basically effectively pays for the IT, his computer and everything else to get him in. So that's great. And of course, the government pay a large amount of the money towards the actual course, don't they? Is that right?
Yeah. So it's split into two. You would be classed as an apprenticeship levy payer. So that's the organisations with a payroll over 3 million a year. And the ones that fall under 3 million a year is classed as non-levy, which they get 95% of the funding paid by the government, and they contribute just 5%.
Tell you what I thought was maybe quite interesting, and I'd be interested to know if this is starting to happen already. Are young people going to be looking at, if COVID is here to stay, are they going to be looking at jobs away from the hospitality sector, away from hairdressers and people who are definitely always forced to close? Do you think we'll end up with a shortage of skills around those types of jobs?
I think you're possibly right. Yeah, I suppose that depends on how the individual is at that age and what career advice they're given. But you're seeing the same sectors, the same industries that are getting the punishment, should we say, and having to lock down, and arguments why us compared to this and that. So it will have an impact, because health, food, IT, digital, they're the ones that have grown in this. There is others, obviously, but there'll be a lot of people thinking I'd rather, for job security, go down that route. And that's where we're looking at the level 3 provision that's going to be fully funded for people moving forward, to upskill them from the hardest hit industries or the redundant industries to bring them into industries that the shortages are. But I think once we get past, there is still going to be a need for hairdressers and hospitality. So there will probably be a shortage at that point, and then there'll be another initiative. Sorry?
Unless you run past the benefits to your hair.
You're all going to be cutting your own hair soon.
That's the problem there.
So what I was going to say, interesting enough, is that Jack, who's joined us as an apprentice, he's a BA Honours degree graduate. So and I think the problem that we're going to have, and maybe Jack's a good example of this, is that it's a shortage of opportunities that are out there for businesses, or sorry, I should say apprentices. So you've got people leaving university who are then taking up apprenticeships, and the whole point, I guess, is that Jack went to university not to become apprentice. It's because he wanted to go on and do something else. But because we've got a shortage of opportunities, that we've got some young people coming in that are highly qualified, doing jobs, in looking at opportunities which we can take advantage of as businesses, which is great. We can give them a ladder to climb on. So from business point of view, that's good for us, but also from the young person's opportunity as well. There's an opportunity for them to come into a business and learn from the ground up as well. So I think there's some good opportunities all round, isn't there, at the moment, even though there is a lack of jobs that could be.
Yeah, and I think just on the apprenticeship side, we have a page that we send out in our brochure, which is apprenticeship myths, and there is still a perception of the word apprentice to be a young, low-leveled individual doing 1 day a week at college in more of a trade setting, where the reform in 2017, it's not about that. You can go up to level 7, level 8 apprenticeships, and it's about that they're all about standards, as the class as qualifications, which are required in today's market. They're being created by trailblazer groups of large organisations and professionals to meet the skills gap and needs that we have. So I think the example you said about your apprentice, we see a lot of people with degrees that are coming in and doing a level 3, a level 4 apprenticeship, which is classed as a lower level than what they've already attained, but it's in an area which is more specific to their next route. So they can do a degree in a certain area, but they might come in as a project manager, and they can go and do a level 4 apprenticeship on project management, which is obviously going to be really specific on that side, but it's a work-based qualification that they're learning on the job. So we've seen a lot of people do that. Before 2017, if you had a qualification above the level of the apprenticeship you were enrolling, you wasn't eligible. So it stopped a lot of people that wanted to move careers or move into different departments not be able to access training at them apprenticeships and the funding.
Great. I didn't realise that. That's fantastic to know. Good, excellent. Okay, great. So what I wanted to do is sort of move on to the next subject, and probably the final one, to be fair, and that is it a good time to buy a business? I know certainly from our perspective, we've had a lot of inquiries from business owners wanting to buy, up smaller businesses, or even look to deviate into different areas of business which will add value to their existing business. So we've certainly seen an uptick on that. I mean, prior to lockdown, we've looked at maybe a handful, 4 or 5 purchases of businesses in 5 years. We must have looked at 10 to 15 in the last 6 months. So I don't know if anyone else has sort of had any, dabblings with that at all recently. I know that Byron has, but what about you?
I've done quite a bit, both from a secured lending side, and from an invoice finance side. Invoice finance is used quite a lot when a business is sold, because if the existing finance, the existing company is looking for finance and it isn't encumbered by an existing factor, we can complete the invoice finance facility on the same day of purchase. So we can complete it and use the funds out of that. So essentially, you're buying a business by using their business assets. Similarly, we've done it where we've seen asset value, whether it be directors' homes or the purchasers' homes, to use as a secured route to purchasing a business. the one thing that we've seen a lot of is smaller businesses looking to buy other smaller businesses. I've seen quite a lot of that recently, because maybe the other business is slightly failing, or they've got something that they haven't got, and they can find a cheap way of getting it, or not necessarily cheap, but a quicker route to that market they don't have. We've seen a fair bit of it. My only sort of thing that I'd say is that a lot of the time we haven't been able to complete them for one reason or another, and those are generally because they are COVID affected areas. So it might be the fact that the property that's up for security has been affected by COVID. London has been affected massively, not so much up here. I mean, we just completed on a group of hotels in Scarborough. You know, you would think it must be mad completing a group of hotels in Scarborough in this day and age, but actually, apart from this lockdown, they're actually fully booked for most of next year. So I think that when you start looking at it and you start looking at the intricacies of these deals, a lot of them are being affected. There is cash out there, and alternative funders like myself and Rob, you working with your myriad of funders, there is cash out there. I think what's gone, what's missing is the traditional funding lines, which are maybe slightly cheaper, but the biggest problem that people are finding is getting into and getting access to it. Standard route is go to your bank. I think that, you know, once you start moving out of that, you start talking to people, you stand more of a chance. But I think, is now the time to be buying a business? Absolutely, if you can get the funding for it.
Mm-hmm. Well, there certainly is funding out there at the minute. I mean, the government-backed loans, the C-Build loans that everyone knows about now, they're readily available, not just from the high street banks, but from all the other lenders that are on that panel. I think there's roughly 30 to 40 lenders on that panel now. We have access to most of them. And you can access that funding to buy another business. People might think, well, hold on, why would you be doing that? Surely the money there is to help you cash flow your business in the downturn. However, a lot of lenders are looking at this as an opportunity to save some businesses. So these businesses might, the ones that are going to buy might be hitting the wall soon, whereas someone can come in and buy that business and make them survive. So you can take advantage of those opportunities. So yes, there are lenders out there doing it. And by the way, C-Build's product has been extended now to the end of January. So that's the second time it's been extended now, because it was meant to end this month. So there is still opportunity. But Byron, you've obviously been involved with quite a few.
Yeah, the interesting thing is obviously when this crisis happened, I was thinking, it's obviously the main work that I do is buy and sell, the legal process in terms of buying and selling business, and I was concerned obviously who is going to buy a business at this time, because just generally speaking, when anything like this happens, people just get nervous and think, well, I might as well wait, in terms of everything that they're thinking of doing, and just focus on survival. But yeah, I think my view. And that's not been the case. I've been relatively busy, or I've had a good stream of work, and I think COVID should situation now. If it's the right time for you to buy a business or to sell a business, I don't think it should put you off buying and selling a business if it's right to do so anyway. Because obviously the finance is out there, as you guys said, and you can look to structure it from a financial perspective and consider those options. But in terms of selling a business, I think I'm seeing that a lot of people are obviously, because of what's happened, are thinking about the future, are thinking about exit planning, are thinking about succession planning, and there's a lot of management buyout situations where they're wanting to bring management through and look to, owners are looking to agree essentially a retirement plan. So I think a lot of sellers are minded to sell and consider selling right now, but also from a buyer's perspective, it just underlines how important the due diligence process is. You know, if essentially you will always investigate the business that.
Byron's gone.
Lost you, Byron.
I'm here.
No, he's back. He's back
now.
Sorry. So yeah, I was saying from. So I'm getting bad network quality. But yeah, in terms of buying, if a business is robust and right, and I mean, in certain sectors, obviously, it might not be the right time to buy a hospitality or entertainment sector. But in other sectors, if a business is is surviving now and continuing to trade, and the bottom line looks good, then this period will pass. So if it's a good time to buy a business, and it's right for you to buy a business, you should still do it, because and as long as you put in place a proper due diligence exercise in terms of investigating the business that you're buying, and you're fully informed about there being any issues with clients, customers, your supply chains, if there has been any impact from COVID, and even in terms of employees and redundancies and things. It's just, I think this situation just completely underlines the importance of doing a proper due diligence exercise, so you know exactly what you're buying. But if it's right, it shouldn't put you off this situation, I don't think.
Yeah, I like that, Brian. It's absolutely right. I think people need to be positive. Got to do the due diligence, but again, don't believe everything you see and read in the press. There are opportunities out there, and if it's the right time to do it for you, go ahead and do it. Again, it's looking to what the new normal will be. Again, it's looking at your 12-month business plan, maybe. Where do you want to be in 12 months' time? What are the opportunities to grow your business? Is now the time to buy out somebody? Certainly, be positive, do your due diligence, certainly get outside advice and support. If it's right, go for it.
Do you think that a lot of people who maybe are at the end of their working career, who own businesses, that were maybe planning on working 2 or 3 days a week until they die, or until they ultimately feel that actually now I can do 7 days of golf, do you think that those people have now, throughout COVID, with maybe the time that they've had at home, they've actually sat there and thought, do you know what, sod it, we'll just get rid of it, and now is the time to sell, and that there's more opportunities because of that, because they've realised actually life's not that bad away from it. Look, we're all business owners, we know what it gets like. It can become all consuming, and I just wonder whether there'll be some more opportunities, and that happens to a client of mine where one that we just looked at, they make headsets. They've gone absolutely mega busy because headsets and webcams are the two. Well, I mean, exactly wrong. And I think that they decided that although they were getting busy and it was going really well, it was the perfect time for them to sell, not only because value is obviously going to be great, but because they've realised actually we've done our work and it's time to sort of pass it on.
Yeah, that's exactly the sort of impression I'm getting, that the potential sellers there are people there who are looking at their options going forward and essentially retirement planning, and looking at options where they can sell. So there is the opportunity there for buyers, and as I say, this in terms of management buyout, that seems to be quite a popular option, because if you own a business, you could essentially work with the managers to collectively agree a structure to sell the business, which gives you an exit and a retirement plan, but also protects your business and protects your brand, and that the people coming in understand your business. So the management buyout option is a good one, and ultimately the finance is there. The finance is still there if you want to do it, and if, like you said, if the business is right to buy, subject to all the due diligence and that you've done all your proper checks, if it's robust now and it's doing quite well, it's going to be doing well in the near future. This is not going to last forever.
Definitely. And Phil, you sort of help people plan and look at buying a business, don't you? Because often we find that people come to us saying, "Look, I found this business, I want to buy it," and they really haven't got a business plan at all about how to do it. It's all sort of back of a fag packet, sort of wake up in the morning, oh, that's a great idea, it looks like a great price, but go and buy it, sort of thing. But often they don't really have a plan in place. But you can help people do that, can't you?
Yeah, certainly. We've helped numerous businesses over the years to either buy out their existing business in a management buyout, or buy other businesses out. And there's different ways of doing it. And again, quite often business owners only think, right, well, I just need to go to my bank, borrow a big chunk of money and pay the business off. Yes, you can do it that way, but there are other options as well. And that's, again, why it's always advisable to get support from your accountant, your lawyer, whoever can give you the right advice. Get it, find out what your options are, and then you can make an informed choice of the best way to buy a business.
Yeah, I found that I think it's fundamental to bottom out exactly structure is going to be and how it's going to work in terms of structuring the deal as a whole, you know, because like you say, there's all sorts of options in terms of how it can be funded, how the seller is, you know, it's not necessarily they're going to receive all the money up front. It could be a deferred consideration option, and that could be linked to performance of the business and things like that. So there is ways that you can protect both seller and buyer, and everyone can work together to make it work. So the seller's getting a secure exit plan, but you're also buying a business that you know is not going to be that it's not going to all fall through in the next few months, or hopefully.
Absolutely. I mean, one example of a client we helped buy another, well, it's a competitor out, and he actually bought the competitor out just through the profits of that business. He didn't actually have to put any of his own money in. He bought the business out over 18 months, and it didn't cost him money, but he didn't have to go to his bank and borrow a big chunk of money.
Yeah.
You know, he was over the moon.
It's very smart though, Phil. There's not very many of those around, or very many businesses that will be making profit this year.
Well, this is about 3 years ago, that one, but that particular one.
Unless they obviously make aprons for the NHS.
Well, there you go. There's some do, and hand gels, and there's opportunity.
Yeah, I think right though. I think a lot of people just don't appreciate that you can structure a deal whereby money can come out of the target company and things like that. So ultimately, you're not having to find cash. There can be a chunk that's taken from the company itself. I mean, a lot of sellers might think, well, actually, I'm using my own money to buy my shares, for example. But if it's structured properly, and you're getting, it's a way, it's tax efficient, and it's a proper exit, and you're going to be paid over a certain period of time, and it works well for you, then that can work. So yeah, it's about getting the proper advice and structuring it properly at the outset, I think.
Well, I think it's interesting. Often people just think, oh, I just go and get a lump of cash, like you said earlier, Phil, and I'll buy a business. However, is that the right way of doing things? Yes, like you just explained a moment ago as well, if they've got some cash reserves and they can help buy the business from the cash reserves or ongoing income, if you've got an outgoing director who's going to hang around for 3 years, they've got a 3-year buyout plan, and you can use the profits to do that, then great. However, it's usually about trying to use the right product and using and generating the cash around the business to get a return on investment. So, like Gareth will probably explain as well, is that invoice finance is a great opportunity to leverage cash out of the business to help buy out the business, but also if there's unencumbered assets in the business as well, vehicles or even like office furniture and that kind of stuff. If there's unencumbered assets, you can then go and refinance and leverage the cash out of it. You can do it that way. Of course, you can get loans as well. There's other means to do it. So, but just touching on invoice finance, Gareth, how would that work in a sort of a management buyout situation?
Yeah, so the way that normally works is the existing sales ledger would be offered up to an invoice finance company. So if you're looking to raise 200,000 and you've got £500,000 sales ledger, you would get an advance rate to 80-90% against the £500,000 that's outstanding. The way that it works when you're doing a buyout is on the day of completion, the funder, instead of sending the money to the business or a portion of that funding, so if 200,000 would actually go to Byron or to a lawyer, and it would sit with them in trust, obviously for the owners. So it can form a part. I've worked on a number of them where it just forms a part of a finance, sort of facility. So it could be a mixed asset facility. So you could be the company may own and this is talking of a buyout which is maybe a bit bigger as opposed to a small company buyout. But there's maybe a property that's involved and there's an unencumbered sales ledger. So you would maybe do some sort of secured loan against the property to get the deal done quickly, and then you would get an advance in the receivables of the business, part of which would go to the business, which is obviously good for cash flow because any of the sales that I've been involved with, generally there's a cash raid on the 11th hour. The incumbent owner takes whatever's left in the bank, unless they've been a clever lawyer on the other side who's made sure that part of the agreement is that they don't leave the business with anything. So generally, some of that cash from that book will go up to the lawyer, some of it will go to the business, and you can use a number of other facilities in it as well.
So that you're basically explaining about the lockbox, aren't you? We just recently did one as well with Byron's help as well for a customer. So we had that element put in there, so there wasn't a raid on the cash flow at the 11th hour, like you said.
Yeah.
So,
I think it's just important, because obviously you could just, you can sell and buy a business on a stock transfer form, but ultimately everybody wants to be fully informed about, especially from the buyer's point of view, what are you actually buying at the point that you buy the business, because these processes can take a long time. So you could have done your investigation into the company and looked at the historical accounts and you think it's sound, but you need to know exactly what the situation is about in the business when you buy it. So yeah, you can put a lot of protection mechanisms in to just ensure that everyone's fully informed and you know exactly the financial position of the business when you're buying it, so you know the price is right and everybody's happy.
I think what we'll be interested in, Rob, I'll just pick you up on something you said earlier about using the C-bills to buy a business. And obviously, if you're buying a struggling business, you're using the cash in the correct way that's to be used for. What I'd be interested in is, and I guess nobody has answered this, but it might create a discussion point, is T-bills and bounce back that are all being taken. I think a lot of businesses have just had bounce back because it's been that easy to get hold of. But certainly the C-bills, how much of that has been used in a situation where maybe the incumbent business has a case that that COVID has affected them and they need that money, but isn't being necessarily used correctly. So if you've got a business, a nice business turning over decent cash, they either want to buy another business or buy some kit for their business or whatever it is, and they take a bounce back, for instance, because it's no questions asked money, and then they've gone and bought another business and used that 50k to do that, or even the C-bills where maybe they've said that about their own business and then they've used it to buy something else that isn't. I think that would be quite interesting to understand. But I mean, Byron, have you had any experience that Phil?
In terms of the actual government loans being used to fund the business purchase, etc., I haven't. It did come up as an option for a deal I was working on, but it actually didn't complete. So yeah, I'm not sure what the current situation is, whether that money can be used for business purchases, because essentially you're using it in your business to develop in the commercial interest of your business. But whether you're allowed to do that or not, I don't know, unfortunately.
Well, I could probably answer that, and the fact is that we do know of one or two lenders that will allow it. I think in general, the general rules of the C-bills and the bounce back loans are no, but there are some special lenders out there who basically see it as actually an opportunity for a business to buy another business and keep those people employed, and so there is some benefits and positivity to it. So yes, it can be done. Certainly, is it the right product? I don't know if there's any alternative at the moment. If I'm honest, all the banks are focused on the C-bills. That if you went and knocked on their door and said, I just want a normal bog standard loan for this purpose, they say, well, I haven't got time. We're just doing the C-bills at the minute. So, and that's the situation people in. We've got customers who have got a straightforward commercial mortgage with NatWest. NatWest haven't looked at it. It's been with them 7 months because they're so bogged down with the C-bills loans. So, I think you're almost pushed into it in a way.
Yeah.
But you're absolutely right, though. Loans shouldn't be used in general terms to buy, assets. I know business is an asset, but yes, you can use loans to do that. But I'm talking about physical assets like vehicles and, plant and machinery and office equipment, that kind of stuff. You shouldn't be using the loan for that purpose, even if the loan is absolutely dirt. You shouldn't be using it for that purpose. You should be using it for a lease or that kind of stuff. But we see it time and again. People have used the money to buy assets. Certainly from our asset part of the business has gone down. It's dipped a bit, and I think it is down to the fact that people have got a load of cheap money in from the banks, and they're using that money to buy IT or whatever it may be for their business. And even if you put up a good case and say, look, you should be doing it on a lease, and then you use that other cash to, train your staff or increase your product line or market yourself better, that's going to give you a return on investment. That argument, even though it's a good argument, seems to fall on deaf ears quite a lot, because I think people just see cheap loan, I'm going to buy that with it. And,
I think I've come across quite a few businesses as well where, like Gareth said, it's been easy money, no questions asked. They've taken the money and some haven't spent any of it yet. Yeah, it's just sat there because they could get it.
I think I've seen it quite a few times where it's either one extreme to the other.
Yeah.
One they've either absolutely gone and just spent it, and the other one, they're still just sat on it. John and I have worked on a deal where he's still just sat on it just for a rainy day. I think what a lot of people don't realise is, you get your 12 months free. 50 grand is going to cost you 12 or 1300 quid a month.
Yes.
So, and then I think at that point they'll see probably a load, like Phil's just said, just go bang, you have it back then.
Yeah, I think so. I think next year, when reality hits a lot of people and they've got to start paying it back, there'll be a lot of movement around the market.
I think what's interesting as well, I don't know if you heard last time when Rishi said, we're going to extend the CBILS deadline. He also said, by the way, all those loans can now be extended to 10 years. And I think the banks went, what? Really? And I've even phoned my bank, because we've got a bounce back loan, and said, so is it extended to 10 years now? They said, we don't know. We're still internally trying to digest that one. Yeah. So I haven't heard of any lenders go, no worries, we're extended to 10 years. I think it's about, you would have to apply for that. They're going to put some structure around it to make it difficult, because the banks are thinking, we do not want all these loans outstanding for 10 years. It's just going to cause us major headaches. So we'll wait and see. I think what's going to happen though is it's the first loans went out in, was it May last year? When May hits next year, and those businesses have blatantly taken the money and thought, two fingers to you, I'm going to buy whatever I want and scarper and close the business down. What people might think it's a small percentage. I actually think it's going to be quite a chunky percentage. I can see it being somewhere like 10% of non-repayment.
I can give you a very quick but very good little story about one that's happened. A business fell into insolvency and walked into an insolvency practitioner. And basically put cards on the table. Look, this is the situation. I've got 50 grand, I've got the bounce back left, so I'm going to pay the bounce back to the government. And under the rules of the insolvency, they could not pay that money back to the government because it would be seen as a preferential creditor. So what will end up happening is that money, the business will go bust, and it is bust. That money will essentially pay for the insolvency of that business. And the government will not see any of that back. So from a which is crazy, but from a point of view of, here's the business, here it is, that money should be going. That should. I know that you could throughout COVID trade insolvency because they changed the rules slightly, that it wasn't essentially an issue, but that's a really big one. How many of those businesses are going to be using their last 10 grand or applying for a bounce back and then, because it's not PG'd or anything, and using it to liquidate the business?
Yeah. I also think as well, it's interesting because there's people that have taken a loan, and I'm one of them, who sat on it and thought, I'll pay it back if I don't need it. And there's lots of people like that. But I'm also thinking, I wish I hadn't taken it out in May. I wish I'd waited and maybe taken it out, in December, January, and then have an extra 12 months, So can I pay it back and then go and get it back out again in January? So
no, let's let you try it and let me know how that goes.
There's loads of grey areas around it, isn't it? There's going to be a massive fallout from it. Who knows what's going to happen, but we'll soon find out at the beginning of May as these stories start trickling in. And it's going to have a major effect on us individually, because we're all going to be the taxpayers that pay for it in one way or another, isn't it? So, and on that wonderful bomb, should we leave it there, guys? Yeah, exactly. So that we've just done an hour, just over an hour. So that's great. I think we covered off quite a few bits and bobs. Everyone's got involved. Everyone's had their little say. So I think that's been good. Not unless we want to talk about anything else, guys, or maybe leave it to a topic for next month. So, but yeah, appreciate that.
That's good.
Thank you.
Yeah, well done.
Thank you, Rob.